You could have the most profitable trading strategy in the world, and there's a good chance it would still fail you. That's a bold statement, I know, but after years of digging through my own failures and the failures of thousands of other traders, the data is undeniable. Most traders don't lose money because their strategy is bad. They lose money because the strategy was never built for them. Trading is an emotional war, and it's fought mostly against yourself. We've all been there. You see the perfect setup. You know your rules, you've backtested it for hours, but right in that moment, you freeze. You miss the entry. Or even worse, you jump the gun, driven by a raw fear of missing out. Maybe you take a small loss and feel that instant burning need to win it back. So you fire off a wild, unplanned trade just to soothe your ego. That's not a strategy problem. That's a psychological mismatch. It's an identity problem. There's a gap between the trader you think you are and how your brain is actually wired to handle risk and pressure. That gap is the single most destructive force in trading. It's like telling a world-class marathon runner they have to compete in the 100-meter sprint. Sooner or later, that mismatch is going to break them. But what if you could diagnose that mismatch? What if a simple set of questions could reveal your core decision-making style when everything's on the line? I got obsessed with this idea and built a framework that does exactly that. It reveals which of 5 fundamental trader archetypes you really are. By the end of this, you'll find your archetype, and for the first time, you might finally understand why your current approach has been sabotaging you. First up is the archetype that so many new traders fall into, often without even realizing it, the reactive trader. This trader runs on speed. They're all about action, process information in a flash, and thrive on momentum. Their nervous system is wired for the thrill of the chase. They feel most alive when the market is ripping. They're the ones who see a stock spiking and feel an almost magnetic pull to jump on for the ride. Their strength is decisiveness. While everyone else is still analyzing, the reactive trader is already in, catching the first part of a big move. They have a gut feeling for momentum that you just can't learn from a book. But here's the flip side, where that great strength becomes a fatal flaw. Under pressure, decisiveness turns into impulsivity. That need for action becomes overtrading. After a loss, the reactive trader is the number one most likely to revenge trade. The loss creates this intense emotional void, a jolt of adrenaline and frustration, and their brain just screams for another hit of the button. They are driven by a deep-seated fear of missing out, seeing every single tick as a fortune they're about to miss. This leads them to take garbage setups. That don't meet their own rules, just so they can stay in the game. They're not trading a plan, they're chasing a feeling. So, how do you know if this is you? Ask yourself this. Does a fast-moving chart make you feel antsy and desperate to get in, even if there's no clear setup? After you take a loss, is your very first instinct to find another trade immediately to win that money back? Does it feel physically painful to sit on your hands? If you're nodding along, the solution isn't to fight your nature, it's to cage it. Reactive traders don't need more freedom, they need more rules. They should avoid strategies with unlimited discretion that require them to be glued to the screen all day. That's just a recipe for burnout. They'll blow up their account. Instead, the reactive trader thrives with simple, rigid systems and clearly defined trading times. They do best trading only specific high-probability setups. They need to set hard limits like only 3 trades per day, or a 3 strikes and you're out rule after 3 straight losses. Channel that need for action into short bursts. The goal is to channel that need for action into short, focused bursts of execution, and then walk away. Your mantra should be, my edge is found in restraint, not in action. Next, we have the complete opposite of the reactive trader, the analytical overthinker. This is the trader who lives in a world of data, logic, and absolute precision. Their desk probably has stacks of notes, their charts are loaded with 12 different indicators, and they've backtested their strategy across 3 decades of data. They are the researchers, the system builders. Their greatest strength is their depth of knowledge. They don't get suckered in by hype or emotion. But when the pressure is on, that quest for certainty becomes their downfall. The analytical overthinker suffers from analysis paralysis. They need so much confirmation that by the time they're ready to click, the move is already over. They'll wait for just one more candle, then one more. They're stuck in a loop of what if, and their real fear isn't of losing money, it's of being wrong. This leads to late entries, missed trades, and constant regret. They're also the first to jump to a new strategy. The second a system hits a normal drawdown, they're back to the drawing board, convinced a more perfect system is out there. Here are the questions. Do you constantly find yourself spotting a great trade, only to hesitate and watch it take off without you? Spending more time tweaking than trading? Do you spend more time tweaking your indicators than you do placing trades? When a trade goes against you, do you immediately question your entire system? For the analytical overthinker, the path forward is all about accepting good enough. You have to learn that trading is a game of probabilities, not certainties. You need to avoid fast-paced environments like scalping, where hesitation is a death sentence. Trying to make rapid, intuitive decisions will feel like a war in your head. Your ideal environment is one of pure structure. You thrive with rule-based strategies and checklists for every entry and exit, master just one or two markets. The key is to build a plan that forces you to act. Your rule might be, if conditions A, B, and C are met, I will enter the trade. Period. No more deliberation. Your goal is to use data to build a trigger, not a never-ending research project. Your mantra must be, my analysis serves my execution, not my hesitation. Now we get to the third archetype, the one many professional traders strive to become, the Structured Executor. This trader is a master of discipline and routine. They are process-driven and find comfort in repetition. For them, trading isn't about excitement, it's about the flawless execution of a proven edge, day in and day out. They have a pre-market routine, a plan sitting on their desk, and a journal they fill out with near religious devotion. Their strength is unshakable consistency. They can follow a plan without ever straying, treating wins and losses with the same emotional calm. This lets them slowly and methodically sharpen their edge. But the Structured Executor's greatest strength, their rigidity, is also their biggest weakness. When the market turns into a chaotic mess, they freeze. The thought of taking a discretionary trade, one that's not in their rulebook, feels like a total betrayal of their philosophy. They might see a screamingly obvious opportunity and just let it go. Their absolute commitment to the process can blind them to the reality of what's happening right now. Are you a Structured Executor? Think about these questions. Do you feel most at ease when you have a precise, step-by-step plan? Does the idea of taking a trade based on feel or intuition make you deeply uncomfortable? Are you more upset by breaking a rule on a winning trade than by following your rules perfectly on a losing trade? If so, you need controlled flexibility. The goal isn't to throw away your structure, but to build in a small dose of controlled flexibility. Avoid markets defined by pure chaos. It will clash with your need for order. Your ideal strategy is built around highly repeatable setups. Become a specialist in one specific pattern. Create an if-then plan to adapt without abandoning your process. This lets them adapt without abandoning their entire process. Your mantra should be, my discipline is my fortress, but I have to know when to open the gate. Our fourth archetype is driven by one primary emotion, fear. This is the Risk-Averse Protector. Their entire mindset is built around protecting capital. Their first, second, and third thought on any trade is not, how much can I make, but how much can I lose? They are cautious and have a deep respect for risk. This is their superpower. Because of their fear of loss, they almost never blow up an account. They avoid high-risk gambles that wipe other traders out. Their patience allows them to wait for only the absolute highest quality setups, passing on anything that looks even a little bit iffy. But this is a double-edged sword. Under pressure, caution turns into paralyzing fear. They're the traders who dump a winning trade at the very first sign of a pullback, terrified of giving back a dime. They use ridiculously tight stop losses that get them knocked out by normal market noise. They trade with such small sizes that even when right, the win is meaningless. In the worst cases, their fear of losing leads to total trade avoidance. They'll see a valid setup but be too paralyzed to enter. Psychology prioritizes avoiding pain. Do you find yourself constantly cutting winning trades short, only to watch them run to your original target without you? Obsessively checking open positions? Do you feel a jolt of anxiety with every small tick that goes against you? Have you ever avoided a perfect setup just because you were scared of a loss? For this archetype, the journey is all about building trust. Not trust in the market, but trust in your own system. Avoid high volatility stocks and aggressive strategies. Your ideal style is low-frequency trading, focusing on higher time frames where you have more time to think. Operate with fixed, predefined risk. 1% on every trade. You're teaching your brain that a loss is just a business expense. Your mantra is, my rules are the shield that protects me from my fear. And that brings us to our fifth archetype, the patient position builder. They operate on a completely different clock than everyone else. They are calm. They think in weeks and months instead of minutes, and have a level of patience that is almost superhuman. They're interested in the big story behind the chart. Their greatest strength is their immunity to impulse. The daily noise just doesn't bother them. They calmly hold, fully confident in their big picture thesis. However, their slow and deliberate nature can easily become pure passivity. They might hold on to a losing position for far too long, convincing themselves they're still right. To find out if you're a position builder, ask, do you find day trading or scalping to be stressful and pointless? More interested in the why than the how? Are you more interested in the why behind a market move than the how? Have you ever held a losing trade way longer than you should have because of your thesis? For this archetype, success means lining up your strategy with your natural rhythm. Avoid scalping and high-frequency day trading at all costs. It's a recipe for misery. You are built for swing trading and position trading, where your ability to see the bigger picture is a massive edge. You just need to add clear invalidation points. For example, I believe this will go up. but if it closes below this level for 3 straight days, my thesis is officially wrong and I'm out. This provides a necessary check. This provides a necessary check on your tendency to become passive or overly stubborn. Your mantra should be, my patience is my edge, but it must be balanced with an exit plan. So, where do you see yourself? In the impulsive action of the reactive trader, the endless analysis of the overthinker, the rigid discipline of the executor, the cautious fear of the protector, or the unshakable patience of the position builder? Your failures show you your type faster than wins. Look back at your biggest, dumbest trading mistakes. Were they caused by impatience and FOMO? That points to the reactive trader, hesitation, analytical overthinker. Did you fail because you couldn't adapt? That's the structured executor. Did you cut a massive winner for a tiny profit? Risk-Averse Protector. Married to an idea? Position builder. Understanding this is step 1. The real work starts now. It's about consciously picking a style that works with your natural wiring, not fighting against it. Success doesn't come from copying some guru strategy. It comes from building a system around your own strengths and creating guardrails for your weaknesses. For years, we've all been told the secret is to find a profitable strategy. But the real secret is to first find yourself. Who am I when I trade? Your psychological identity is the invisible blueprint that runs every decision you make. You can't change your wiring overnight, but you can choose your arena. Stop trying to be the trader you think you should be and start embracing the trader you are. Build your rules and routines around that truth. Alignment is the ultimate edge. Fit breeds consistency, and in the chaos of the markets, consistency is the closest thing to a holy grail you will ever find. What kind of trader are you? Let me know in the comments which archetype hit home for you the most. Trade with a plan, not a prediction. Trade smart.